Jim, let's talk about Moody's. Moody's has stuck its foot into this whole mess of Europe. Now, obviously, it's a rating agency, you know, and Standard & Poor's also entered into this fray with their talk of downgrades. You know, are we putting too much into these rating agencies? Well, should they quit meddling in European politics, or are they being the voice of reason?
I think they're being the voice of reason. I was struck that what the real accord was last week was to make it so no bank just closes instantly.
Right.
I still think some banks are going to close. They have plenty of credit lines, but just not likely that everyone can make it. It's just that now it could be orderly, like a city. Maybe we have a city group, you know, which stayed in business and just doesn't do well. But they didn't do anything to solve the sovereign debt problem. Italy has to raise money, and you know, you'll see the ECB in there maybe buying and selling at the same time, and where's the IMF? And they didn't really do anything to make it so that you feel good about those countries. So, like, why? I debated this morning. I was talking with David Faber. Like, would you buy the one-year Italian note? Maybe a bill, Italian bill. But at the same time, maybe the FXE, maybe the euro breaks down. And that's what looks to be happening, that the euro looks like it's breaking down. And I've been staying DEFCON 3, but if the euro were to break down convincingly, I'd have to go to DEFCON 2, meaning that I fully expect that we're going to have something go very wrong there. I like the fact that it's not Lehman. If we didn't have Intel today, maybe people would say, you know what, there's something to buy. But
the dollar.
The dollar. Oh, boy, and gold goes down. It's a bad setup. What I want to warn people about, though, is that, and we were overbought coming in, is that 3 or 4 days into these sell-offs has begun to be when you start looking at J&J again, Altria. And, you know, if you look at the course of the Dow Jones average, it tends to go down for 3 or 4%. And then people come in and buy those stocks. This may be it again.
Let me ask you this. Now, when we were talking about, you know, everybody, when we were having our financial crisis, it was all about buy the euro, sell the dollar.
Right.
I'm not hearing everybody say, buy the dollar now. Why are we not having that reverse?
I think because they're going to come after us after they come after Europe, and we're still printing so much money.
Okay.
It's just terrible.
All right. So go with the trusted
Wait
name,
a couple days.
J&J.
Wait a couple days and then come back. It's worked. It's worked. It's worked.
Okay.
Now, again, FXE really breaking very bad.
What does FXE have to go to?
131. It's got to hold 131.
Got to hold 131.
If it doesn't, then I guess we go to DEFCON 2 and the market really gets hit. Maybe we revisit some of the levels that we thought we wouldn't go back to from late September.
Okay, mark that level 130 on the FXE.
Yep, that's bad news there.